Last note, Bitcoin. So here's its history, most of its history. And you can see we have been in effectively a bull market with higher lows since its inception. And here we are again, we're on the way up. I think what happened this year is quite significant. It happened that the Bitcoin moved up during a risk-off, a very important risk-off moment, the regional bank crisis in March. It went from 19,000. This is a long-term chart. So what I'm telling you is an intraday. It hit a low during that regional bank crisis at 19,000 and shot up to 30,000. Why was that? Flight to quality, as Larry Fink would say. Flight to quality, as we would say. Flight to safety, as we would say.
Bitcoin stands out as an unparalleled asset, conveying a resounding message from Cathie Wood, the CEO and founder of ARK Invest. In her recent update, she delved into the intrinsic beauty of Bitcoin, emphasizing that 2023 marked a pivotal year for the cryptocurrency. During a crucial risk-off moment amid the regional banking crisis in March, Bitcoin exhibited a remarkable surge, escalating from $19,000 to $30,000. Wood attributes this surge to a flight to quality, a term echoed by Larry Fink, or, as Cathie Wood articulates it, a flight to safety. What distinguishes Bitcoin as a storage medium for wealth is its absence of counterparty risk, a significant factor. Traditionally viewed as a risk-on asset that thrives in favorable market conditions with high liquidity, Bitcoin has, in 2023, demonstrated its ability to outperform even in risk-off periods. Regardless of market sentiment, Bitcoin appears poised to consistently outperform, showcasing the inherent beauty of its resilience. The video's conclusion promises further insights from Cathie Wood, explaining why Bitcoin and cryptocurrencies are poised to become significant issues in the 2024 presidential election.
It hit a low during that regional bank crisis at 19,000 and shot up to 30,000. Why was that? Flight to quality, as Larry Fink would say. Flight to quality, as we would say. Flight to safety, as we would say. Because there is no counterparty risk here in this decentralized, transparent monetary system, unlike what happened to the fiat monetary system in 08-09. And I think more people are beginning to understand that this is not just a risk-on asset. When the markets are feeling really good, Bitcoin tends to do very well. But can you believe it's also a risk-off vehicle? And more investors, including institutions, are beginning to understand this. So this is innovation at its best, and it is one of the 5 major innovation platforms around which we have centered our research. So robotics, energy storage, artificial intelligence, blockchain technology, and finally multi-omic sequencing. The other thing that happened actually this week was an executive order on artificial intelligence, which we think can be described as serious overreach and certainly favors the incumbent, and we think would really hurt innovation. So it is an executive order. We do think that both Bitcoin or crypto or digital assets and artificial intelligence now could become part of the election year debate. It seems like both groups, the Bitcoin and crypto digital asset community and the AI community, except for maybe the largest players, are both up in arms about this executive order. If it becomes an election year issue, we believe that candidates will distinguish themselves with their points of view on these topics. And what I found interesting in our brainstorm today is that both of these, the crypto/digital assets controversies vis-a-vis this administration, and now the AI controversy, both of them are bipartisan. So they will get some attention, and if there is a change in the administration, of course that executive order will probably be no longer because, again, we think it's going to become an election year issue. And many people look at what's going on now and say, this is a recipe for inflation. The way to get out of debt is to inflate it away. We don't think that's going to be the case, and we'll get into a few indicators in a moment that support our view that actually the risk is not inflation, moving forward. It is deflation. So now let's skip on to monetary policy. Now, Chairman Powell this week, during his comments after the board meeting, I think he had an inkling that the employment reports this week were going to be weak. I think he probably had a sense of initial claims, they went up, but also perhaps an early read on the employment report, which today was very weak. And one of the reasons it is so weak is this chart. So this is money growth, M2 growth on a year-over-year basis, going back into the 60s, early 60s. And you can see we've never seen a decline in money like this in this period of time. You have to go back to the 1930s, which of course was the Great Depression, to see a decline in money like this. Now, this is the other side of what happened during COVID, so it's understandable to some extent. But now we're soon going to be lapping one full year of negative money. And so the course correction has taken place, we believe. If money doesn't pick up, we will conclude is it's becoming a serious drag on the economy. And deposits are leaving the system. The regional banks still are losing deposits. That's part of the decline in money. And that's not a good thing. In fact, the KRE Regional Bank Index is revisiting its March lows when we were in a crisis around the regional banks. So the regional bank index is a warning that Fed policy has just overdone it here. We hope it doesn't break down the index, and it is possible that some of the numbers coming out now are making the case for a Fed pivot so clear that the regional banks will not face as stiff a competition from money market funds and will be able to attract deposits again. So this is M2, still declining year over year. And here is the yield curve. Now, we've talked about the yield curve here many times. Here's the picture going back into the 70s. This is the 10-year Treasury yield minus the 2-year Treasury yield. And when it's below zero, it means that short-term interest rates are higher than long-term interest rates, which is not normal, as you can see from this chart. And you can also see that typically when the yield curve inverts, we are either in a recession or not far from a recession. And we would say we've been in a rolling recession for the past year, year and a half. The yield curve inverted for the first time in July of 2022, so it has been more than a year. And we think that it is a harbinger of much slower economic growth and lower inflation than most people believe. The other point we like to make about this chart is, to see a yield curve going down to minus 1% or 100 basis points, just like it did in the early 80s today, is quite something because the base of rates is so much lower. So today we have the long bond yield in the 4.5% to 5% range. Back in the 80s, that number was 15%. And yet we have had the same degree of inversion here. That tells us that monetary policy today is much more stringent than it was even in the early 80s when interest rates were at 15%. Because 100 basis points on 4.5% to 5% is a lot more dramatic than 100 basis points or 1% on 15% interest rates. So we think monetary policy is much tighter than many understand. And we do believe it will have far-reaching ramifications over the next year or so. And as we always say, innovation solves problems. Innovation will transform the world and make it a better place. And, it's been such an interesting journey during this interest rate increase, all the fear, investors running back to their benchmarks, selling innovation, selling long-duration assets. So thank you once again, and we will look forward to presenting again next month.
Concluding today's deep dive into the dynamic world of Bitcoin, guided by the insights of ARK Invest visionary Cathie Wood, we've gained a profound understanding of how Bitcoin isn't merely rewriting the rules of finance but is also proving its mettle as a resilient asset in times of economic uncertainty. Throughout 2023, a year filled with surprises, Bitcoin has emerged as a safe haven asset during turbulent times, surpassing mere speculative expectations. This goes beyond market dynamics. It's about recognizing the intrinsic value and untapped potential of this groundbreaking technology. As we progress into the future, the conversation around cryptocurrency is destined to grow louder, especially with the 2024 presidential election on the horizon. The implications for policy, regulation, and the trajectory of digital assets are immense. Bitcoin's role as a transformative force in the financial landscape is not only acknowledged but is becoming increasingly integral to discussions about the future of money and finance. The resilience and performance of Bitcoin in 2023 are shaping its narrative as a key player in the broader economic landscape. Looking ahead, the discourse surrounding cryptocurrency is poised to intensify, reflecting the growing awareness of its transformative potential. With the impending 2024 presidential election, the implications for policy and regulation regarding digital assets will be central to the discussion. As the world navigates this evolving landscape, Bitcoin's resilience and its ability to function as a safe haven asset during economic uncertainties highlight its significance not just as a speculative investment but as a fundamental player in shaping the future of finance and the broader digital economy. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.